Day trading software is very important because you're in a competition. Hi, this is Dr. Barry Burns with Top Dog Trading, and today I want to show you one feature to look for in day trading software. And if you already have it, fantastic. If you don't, well, you might want to consider switching platforms to get this because you'll be at a competitive disadvantage in this very competitive market. So here it is. And I don't sell this, by the way, so I'm not selling you anything here today. I'm just inviting you to go out and look for it. And I'll tell you a couple of platforms that already have it. And it's called the block trade indicator on your charts. So up here, we've got, of course, our market, and then we've got a modified stochastic here. Now, in the bottom panel, I have these histogram lines, as you can see. This is volume down here. That's volume. Now, you may note that, wait a minute, how come there are not volume bars underneath each one of the price bars? That's because these volume bars are measuring only the smart money. So we're not looking for the dumb money. We want to trade with the smart money, obviously. So this is one way that we do it. Now, let me tell you that a lot of people will talk about this, how to track down the whales and trade with the institutions and all of that. First of all, let's put aside some misunderstandings there. That is not as easy as most people say it is. And the reason it isn't is because the whales, the institutions, the hedge funds, all these big, pension plans, they know that we're trying to track them and they don't want to be tracked. And so they're constantly hiding their orders, bringing them in through various markets, various exchanges, various in different size, different times, through accumulation techniques and so forth. So they're making it hard for you to track them. So I'm not going to focus on them. What I'm going to do is focus on, again, what I call the smart money. So we can pull up a time and sales window. So that's what's over here on the right. All right, this is TradeStation. TradeStation does have this the stuff I'm talking about. So does NinjaTrader, by the way. Those are the two platforms that I use. And so again, this is really for day trading. So in the time and sales window, what you'll see is obviously the four columns here. Time, type. You could put bid, ask, buy, sell. I only am interested in the actual commitment of money. So I'm not interested in the bids and the ask. I take that out, I filter that, and I only put in the trades. I only want to see the actual trades where people are placing their money because people game the market with bids and asks. So can't really trust those anymore. So I want to see where they've actually committed their money with actual trades, actual buying, actual selling. Then in the third column, of course, you see price. And in the fourth column, this is the key now, you'll see the size of each order. So each row is an order, an independent order. Now, I've filtered again out all of the orders that are less than 20 contracts. This is the NASDAQ 100 futures. So now, how do you determine what size? So I want to only see when people who are trading relative size are trading. When are they coming in? And that will plot the volume on the bottom of my chart. Now, how do you determine what size? Okay, so the way you do that is, again, we're not going to be able to track all the big institutions and all of this and identify them and break them out. They're hiding their tracks. They're covering their footprints. So what I want to ask myself is this very simple question. An amateur trader, your average amateur trader, someone who is losing money, unfortunately, how much are they trading? What kind of size are they trading? Now, they might trade one contract, maybe two, three, maybe four, perhaps 20, not so likely. Not so likely. So we're not only capturing the institutions here, we're just capturing people who are trading big enough accounts with big enough size that the odds are they're probably making money at this point in their lives. All right, now, is that always 100% true? Of course not. Of course not. Everything we do in trading is about a probability scenario. None of it is a certainty. So we're just looking at the odds. What's the rule, not the exception? There's always going to be exceptions to every rule. And the way we make money is not with any one of these things. This one thing alone will not make you money, but it's another piece of evidence to put together to build a case for taking a trade, to get the preponderance of the evidence. And I'll show you exactly how we do that. So, okay, so these are the orders. Now, you can do this on a time and sales, and most charting platforms do have a time and sales window that you can pull up and see this. Some you can filter out the smaller size trades, some you can't. You'll have to talk to your charting platform about that, ask your help desk, and they can help you walk through that. Now, what I like is I like to then transfer that over to the chart. Now, if you can't transfer it over to the chart, another thing that you could do is you could simply create audio alerts so that when an order of a certain size, magnitude, goes through the market, you get an audio alert. And that way you don't have to be eyeballing two windows back and forth. So here we go. Okay, and now it'll also show you the relative size. So here we get some larger orders coming in. And where do they come in? They come in right at the bottom of the market. And that's one of the common things you'll note. Look for these in two places. Number one, cycle highs and cycle lows. And number two, breakouts. Breakouts through support resistance. So for those of you who are breakout traders and you're getting a lot of false breakouts, adding this to your charting software can dramatically help increase the number of real breakouts you get and help you avoid false breakouts. Because if a breakout isn't accompanied by professional traders, it's probably not going to follow through. For two reasons. Number one, the smart money is not trading it, so it's probably not a smart idea, and it's not a good trade. Number two is because the professional volume in and of itself helps to create that momentum to sustain the movement. So we get the big movements down here. Okay. Now, and then let's look over here. Here we get a cycle high. Oops, there we go. And okay, we get a little professional volume coming in here at the cycle high. Then we get accumulation pattern in here. And this is one of our trades. We call that a second retrace in the trend trade. You notice I've got my wave counts on there. That's automated. I do have software for that, by the way, if you're interested in that. And then, again, notice the relative size. That's important as well. Just because one professional or semi-professional trader comes in and trades doesn't necessarily mean it's going to be a winner. Hey, professional traders have losers too, right? I lose sometimes. Not all my trades are winners. So, again, this is not going to be 100%. But look for a preponderance of the evidence. Wait a minute, we're getting quite a few professionals coming in, and now we got a lot of them coming in. A lot of big trades coming in. So, and where's it coming in? It's coming in right at that cycle low. Here's your cycle low. By the way, if you're interested in that cycle indicator, I can give that to you. Just send me an email at barry@topdogtrading.com, and I'll tell you how to get that. I've got a webinar that we offer and teach you how to trade it, as well as give you the indicator. And then we're retracing to support, and we're putting in a wave low. Second retrace in the trend, wave 4. And this is a super high confirmation then. Then we're saying, okay, we've got several things. We've got the price pattern, second retrace in a trend. Trend is up. We've got support. That's the 15 EMA, by the way, the black line. We've got a cycle low. We've got professional volume. See, again, preponderance of the evidence. And we also have a nice two-bar candlestick pattern there. And there's a few other things we could point out. Now, one last thing I want to point out, as I said, I like to always be very, very transparent and very open and clear about these things. And I just have been around this industry for too long to not make you aware of all of the pluses and minuses of things. So look at this place right here. Now, that is another one of our trade setups. That's the first retrace in the trend. Beautiful pattern, perfect setup for what we look for. However, you'll notice that there is no professional trade volume coming in. Well, how could it go up without professional trade volume? Well, it can. Well, it can. So it's just like I said, this one thing is not enough to trade with. It's not always right. It's not always wrong, but it does add to the probability of success with the confluence of other things. So can the market go up and continue? Can you get a good trade set up even if there's no professional traders on board? Absolutely. And there's a couple of reasons for that. Number one, as I said, professional traders are not always trading the same signals we are. But here's another one. Guess what? They're already in. Remember over here? They already got in. Remember this? They're already there. They got in early. And we have ways of taking, the end of trends as well, trend reversal trades we call them. So this would be the next opportunity after the trend reversal trade. Trend reversal trade is the best reward risk ratio trade there is, but it doesn't have the highest win-loss ratio. So first you're tracing the trend, you're getting in a little later, you're waiting for the trend to be actually confirmed. And anytime you wait for things to be confirmed, you're getting a higher probability trade, but you're getting a worse price because you're waiting longer for that confirmation. Less risky, but also the reward is not as great. So, and then this is the final one. This would be the last one we would take in the direction of the trend. And again, high probability, but see, look how much price action you've already missed. So that's it. Went over time on this video a little bit, but yeah, ask your software provider, whoever you use for day trading, if they provide time and sales windows, and if you can filter that. You've got to be able to filter it and put audio alerts on it. And also if they provide block trade indicator that can be put on your chart. And if they don't, here's one more tip. If they don't provide it, go into the forums of whatever day trading software that you use. And there's often user forums there. And quite often people will create indicators and offer them to the community for free. And you can type in the search box, join the forum. It's usually free. Type in the search box for block trades or things like this, and do a search on it, or just post to the forum and ask people, hey, does anybody know if this has been created for this charting platform? I'm interested in it. Okay, that's it for today. So if you like this video and you're watching it on YouTube, please click the little thumbs up icon below. And hey, also leave a comment. I love it when people leave comments. That encourages me to create more free tutorials for you. I'm also giving away one of my favorite trade strategies. It's called the rubber band trade. It has a very, very high win-loss ratio. And it's a simple strategy you can learn in about 26 short minutes. So get the video explaining that trade strategy absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with the circle around it in the top right corner of this video. And once you do that, I will personally email the video to you.